How's it going, everyone? It's Sam. We are going over NIO stock. We're going to talk about their Q3 report, and they are expecting massive growth throughout the rest of the year. So I'm going to talk about whether I think the stock will go up or go down over the next quarter and kind of what I'm doing with the stock. So if you guys like this, please leave a thumbs up. I really appreciate it. That means a lot. Also, if you want some free stocks through WeBull, you can get 3 free stocks through Wednesday. So if you deposit $100, you can get 3 free stocks. Definitely check that out. It's in the description down below. And let's get into it. So NIO had some mixed bag results here. So they were up pretty significantly until about 250 on Tuesday. Since that happened, they fell down about 13.5% at one point, and they ended up going down about negative 1% in the aftermarket after these earnings were announced. So what happened exactly? Well, they actually reported really good earnings. So they reported about 12.2 thousand in deliveries over Q3 in 2020. Now, we already knew what their deliveries were going to be because of the fact that they released this all ahead of time. This was a pretty good number, though, because you can see we increased from about 20% or so since Q2. Over Q1, we increased a lot Q1 to Q2. And this is still up almost 3 times what it was last year at this time. So this is still a massive growth. Vehicle sales were about 630 million in the third quarter, which represents a 146% increase from 2019. The vehicle margin is something that is very important. This is how much money they actually make on their vehicles. So this was 14.5% in the third quarter compared to negative 6.8% in the third quarter of 2019 and 9.7% in the second quarter of 2020. So what does this mean exactly? Well, it means that they're actually becoming more profitable. Now, they are becoming more efficient in their processes, and they're able to get a higher profit from every vehicle that they sell. So not only are they selling more, they're also becoming more profitable. You can see that their total revenue was about 666.6 million. Kind of a weird coincidence there, but they have 666 million in revenue in the third quarter, representing an increase of 146%. They have gross profit, so overall profit of about 86.3 million in the third quarter. Gross margin was 12.9%, which improved from a negative 12.1% at this time last year. Overall, the net loss was $154 million, which is a decrease of about 11% from the second quarter of this year and a 58% decrease from last year. So this is very good. I mean, we're losing less money. That is always a good thing. They had a net loss of 14 cents per share. So actually, they beat revenue and they beat adjusted earnings per share. So they were expected to lose 17 cents per share. They lost 12. The revenue was expected to be 663 million and it was 666. They also had a better gross margin than what was expected by about 1.5%. So right now they're sitting with about $3.3 billion in cash. You can actually compare this to everything that they had in Q2 and Q3, you can see that pretty much everything is improving across the board, at least a lot of the important factors. You can see here too the deliveries in October, so they did give some guidance on this. They sold about 5,000 vehicles, which is actually good. They're still ramping up, right? They did launch their 100 kilowatt battery pack. So they go through this a little bit more here. It's got 37% higher energy density than their 70 kilowatt pack. This helps with range. It makes it more efficient. There are also some CEO and CFO comments. They say, in the past months, we are pleased to have launched the BaaS, or Battery as a Service, and the 100 kilowatt hour pack with proprietary thermal management and significant performance enhancement enabled by our unique battery swap technologies, innovative battery as a service model, and comprehensive power solutions. Our users can benefit from the lower initial purchase price of vehicles, flexible battery upgrade options, as well as enhanced assurance of battery performance. They also talk about their autonomous driving here. They say, going forward, we remain committed to deploying more resources into the core technology innovations and delivering the best holistic product and services experience to our user community in the pursuit of fortifying our long-term competitiveness in the market. So that's all pretty good news, honestly. Then they go over their future outlook. They say that they expect between 16.5 and 17,000 vehicles. And just remembering, they just did 12,200. So they're expecting about a 40% increase over the last quarter, which is really significant. And this would be about a 100% increase over Q4 last year. And then they would have total revenues of almost $1 billion. So $922 million in Q4. Now, this is getting pretty significant. This is a pretty high number to hit because this would put their outlook for next year over $4 billion. And that's just based on Q4 of this year. So that would actually push them up to just a price to sales ratio of about 15. So we can expect them to hopefully continue to ramp up like they have been and continue to grow. Now, sitting at $47 right now, a lot of people are asking, is it time to buy? Is the stock going up? Is it going down? Well, we have seen a lot of growth recently. You can see here it's been pretty much just right up. And just to be clear, I think the reason that we're seeing so much volatility after the market closed today and just volatility in the stock in general is because people expected NIO to beat expectations. They expect it to grow a lot. You can see that a lot of people have some pretty strong opinions, from people saying that the stock is going to 150 to saying that the stock is set to decline 50%. There are a lot of people that feel very strongly about this company, and I am not personally buying, but I'm not against buying. So I'm not buying because I'm actually buying a good amount of another company, which I am making a video about today. So definitely be on the lookout for that. It's actually Teladoc, if you haven't heard about them, but ARK Invest bought over $100 million worth just last week, and they're buying more this week. So check that video out. But for NIO, I think we will see it continue to rise throughout Q4. And I think that's because we don't have too many options for other companies that are growing at 40% revenue from quarter to quarter. So I think NIO is still going to grow a lot, at least in terms of revenue, in terms of becoming profitable down the road. But right now, I think we will see some volatility, some big buys, some big sells, because it is up a lot. Some people might want to trim their positions, but I think this is a good long-term option. Now, I'm not holding a crystal ball here. There's nothing in my hands. I don't know if this stock is going to go up. So do your own research. Make sure you are looking into this company fully, because it is at a pretty high valuation right now compared to where it's been. Now, let me know your thoughts below on NIO. Let me know if you're buying or selling, what you're doing. Also, thank you for checking out that other video on Teladoc. Definitely be on the lookout for that. And if you want to see a penny stock that ARK Invest has been buying, check this video out here. It is a very interesting 3D printing stock. So definitely check this out. And thank you for checking out WeBull, and I'll see you in this video.